Hello.
Hey, so
Hey.
I wish I could have gotten when you just pulled me in, pulled my chair in.
Get over here.
Yeah.
We need to be in front of the
So,
sign.
We want to make a
Okay.
video. You know, we're making this 2 days after there
After
was 2 or 3 banks.
Two large banks that shut down.
Well, the government took them over.
Yeah.
Yeah. The government took them over.
I mean, we will point out though that not typical people didn't necessarily I don't know if they had their monies there. Some of them were specialized.
Well, either way, the government said that they're going to cover all the deposits, but
Right.
that's not our point. I want to focus on we're selfish.
We're talking about what's going on in the
Yeah.
industry.
Oh, like the video, like the YouTube, or wherever you see this, like it, leave us questions. So look, banks are under increased pressure. They're always under pressure. First, I want the public to know, whether they realize this or not, that just about every credit and underwriting decision is made at the federal government level. Now, when you apply for a mortgage at a bank or a car loan or whatever, or a credit card, no one at the federal government's looking at your loan. But the federal government, through the the FDIC and other regulatory agencies, really control the underwriting of the banks.
Because they set the standard.
They set the standards. So really, the government controls what loans are being done and what loans can't be done. Gelt Financial's place in the marketplace is if someone can go to a bank, they'll go to a bank. The rates are a lot cheaper than Gelt's. But if you can't go to a bank, we fill a need. Or if a bank can't close your loan in time, we fill a need. Approximately 50% of our deals can go to a bank. They just come to us as a bridge loan to close quickly.
To secure the real estate.
Yes, and then they refinance with the bank.
Refinance out.
But this new period we're in, a bank, and we don't know if it's going to be more than these 2 banks. It may be. It doesn't matter from our perspective whether more than 2 banks get closed or not. And with self-understood, we feel bad for the banks and the equity who get wiped out, and the shareholders and
bad for
the
business
employees
out there.
Yeah, but we're here. Our capital's opportunistic capital. We're not regulated by the FDIC, which means we can do things that they don't do, that banks don't do. We don't have the written guidelines and the compliance that they do, but there's a price to pay. We're going to be more expensive than that.
Right, but it serves a purpose and it secures the real estate. It gives you what you need at the moment. And, and when you have the time, you refinance out of our deals.
Yes.
But
so banks are clearly, or I believe, going to get more stringent. The banks even the healthy banks, they're going to be asking more questions, and it's going to become tougher and tougher for borrowers unless they have a lot of time and are pretty perfect to borrow money from banks. So we, as non-bank private lenders, are a fantastic alternative. Now, it's interesting. Bank, I don't even know what rates are anymore because they're going up so fast.
The margin between our rates and the banks
It's not that big anymore.
It's like closing in.
That's correct.
It's closing in.
It used to be where a bank was, let's say, 3.5, 4, and let's say we were 10.
Right.
So we were like over, I don't want to say triple,
much, maybe.
More, 2.5 times,
Yeah.
sometimes triple as much as a bank. Now it's not so. Now, I'll give you an example. A bank could be 7.5, 8 if you can get it. If you can get it, it's a big if. We're 11.5, 12. So you're going to pay a premium to coming to us, clearly, but the premium is not as great. Now, I get it from a psychological point of view. Everyone, no one wants to pay that premium because and you should. But we're a tool for people to use if they can't go to a bank or if they don't have time to go to a bank.
Absolutely. So the reason we're making this video is really to talk about the atmosphere of what's going on in the world right now. I mean, what we're saying is the banks are going to get stricter and stricter, and when you come to us, we have our own guidelines, and you're dealing directly with Jack and myself and our team, and we don't answer to anyone except us and our borrowers, and that's it. So we make a decision on the deal by the property, and we have our own guidelines, but we can do it for you in a really fast, timely manner versus a bank. And they're taking forever. I hear this every single day that they're just exhausted. The borrowers are exhausted. The brokers are exhausted because the banks are just not following through with what they tell you they can do.
It's also what's happened, Marcy, is, and I want to point this out,
Sure.
we don't sell our loans on the secondary market.
Which is a big thing.
We
Trust me.
we keep all of our loans in-house, which means we service them. They're funded with private, or our balance sheet, or high net worth individuals, or whatever. Family
We're a direct
office.
lender.
We're
We
direct lender.
fund the
So we
deal.
don't sell
Yeah.
them on the secondary market.
Right.
So also what's happening is the secondary market is drying up, or is dried up.
No, because people are scared. The
So-
big investors are scared now.
So a lot of our big competition, who were like 1,000 times the size of us,
They're
they've either closed, they've dramatically tightened up on their guidelines, or whatever. They're not doing
And the
deals.
reason they're not doing deals is because their equity has dried up also.
They don't have the capital.
They don't
to
have
do
the
it.
capital anymore. They don't have those big investors, or on that secondary market of like them taking up the real estate and moving it along. It's not happening anymore out there. They've shut down. So it's difficult, but we're here. Like if they,
I have a question for you.
Sure.
I can't see. My eyes are so bad. Does it look like my shirt is buttoned all the way up here?
Like you're being strangled?
Yeah, I don't mean to be. I just noticed.
No, I think it looks
I don't know
fine.
if it's my eyesight, because I can barely see the camera from
I
here.
can't really see it either, to be honest.
Anyway,
with
okay,
you.
just wanted to.
I know we're being filmed.
So the bottom line is, banks are tough.
Yeah.
If you have the time, and if you have your documentation order, you should go to a bank. No question about it. But we are a fantastic alternative for not. And look, we've seen 2 or 3, I think 2 banks close up within 3 days. You may see more. We don't know. No one knows what the future brings. But we just have to roll, so to speak, roll with the punches.
Yeah.
From our perspective, we're collateral lenders.
Right.
So we focus primarily on the real estate, and we're what you call common sense lenders. So it's the story. So if a person has a credit problem, or something, they don't verify their income, or whatever it may be, as long as it makes sense, we want to do the deal. We're doing a lot of foreclosure bailouts now. A lot of people.
But let's just talk about that for a minute. Why they're going into foreclosure. I'm telling you right now, this is why. Because their current lender doesn't want them on the books anymore. The current lenders are not, if someone's loan is ballooning, they're not extending. And a lot of it has to do with commercial. It's a commercial. They don't want the commercial loans on their books anymore. And so what is happening, what we've been seeing a lot in the marketplace, is a lot of pre-foreclosure, because the current lender are forcing the borrowers to refinance out of their loans. They don't want the loans on the books anymore. So that's actually, like, I have 2 deals in the pipeline right now that's the reason.
And some of them just aren't paying.
Some of them aren't paying, but most of the ones I've been seeing lately, it's been the lender that's forcing the foreclosure because they don't want that loan anymore.
It could be. A lot of this stuff is repercussions from COVID. Today's March 14th.
Yeah.
Today's really the day where the world shut down. Was it 3 years ago?
3 years ago.
So
But we're seeing the fallout.
yeah, we're seeing the fall. So
Yeah.
a lot of lenders, you're right, are not extending the loans. By the way, I just want to point this out. Even though we're short-term lenders, 2, 3, 4, 5 years,
We'll let you stay if you need to.
we have, I forget the exact number, but as of 12/31, which was a couple months ago, I think it was 43 or 47 deals on the books, more than 15 years. So if you pay us, we'll keep extending you 3 years, 4 years, 5 years at a time, a year, whatever you want. That's not a problem, as long as you keep paying us. Again, but if you can get a cheaper rate, you should.
Absolutely, but what we're saying is, like, we will do what you need. If you need to stay here longer, we will accommodate you, as long as you're paying.
That's it. Okay, do we leave anything off?
Yep, that's it.
Okay, thank you. Remember, check us out at geltfinancial.com. Remember, when your bank says no, we say yes. Call us at 561-221-0900, and we're looking to do deals. We're definitely doing deals. Every day we're closing deals, and we're looking to do more. Take care and have a great day.
Bye.